Good morning and welcome to the Global Morning Call. Today is Thursday, 7th of December, 2017. And just before we go to our speakers, a reminder that John Hardy is live on Bloomberg TV from 8:35 to 10 CET, where he'll be discussing our outrageous predictions for 2018. On to our next speaker, Peter Garnry on equities.
Thank you, Yasser. Not a lot of things going on actually in the past couple of hours. The most notable story here is a continued divergence. What we in China with the industrials and the non-technology stocks in the Hang Seng is slowing their decline, as you can see on the chart to the right here. We're just firmly sitting above the 100-day moving average, and we saw support in this consolidation area here that was established throughout October. What we're seeing in technology stocks, on the other hand, in the Shenzhen 300 index, is that we're seeing further downward pressure, and it's just mimicking what we're seeing, have seen in the US and Europe in the last couple of, at least the last week. You can actually argue 1.5 weeks. What we're seeing is a massive bit of value stocks across the board and a sell-off in momentum stocks. So you're seeing a divergence. It's very obvious that something is going on in the quant space. It seems like a lot of investors are taking profit in the momentum stocks, which have predominantly been technology stocks. We believe it's temporary, and it will end very soon, and then this will likely be a potential buying the dip opportunity, because fundamentally nothing has really changed in the macro economy, and there will be a lot of good names that you can pick up, especially in the technology space. In terms of U.S. financials, there's a big news hitting on Citigroup. It's probably worth watching. Citigroup said yesterday, the CFO said that they are going to likely take a charge of $20 billion on the deferred tax assets in its foreign overseas holding subsidiaries, in case the Senate's tax bill is being enacted into law. The number is way less for other banks. So, for instance, for JP Morgan, it's only $2 billion, so it's not a big deal. But it's something that could shake Citigroup, because it's a direct hit to the balance sheet. And then yesterday we had the ADP numbers. They were very much in line. We gained almost 200,000 additional jobs in the US. I think it's further evidence that this inflation trade could be coming at full speed here in 2018. I do remain, and it's what I'm saying in all my presentations with clients, that 2018 is the year of inflation in the US. It is coming, and it's going to be pretty, not dramatic, but it's going to change a lot of things, and I don't think everyone is prepared for that, and that's something we're going to talk a little bit more about, also how that spills into equities as we get closer to the end of the year. But for now, we have green markets in Europe and the US, so it seems like the drop has stopped for now, and I think we'll have a pretty okay session, and with that, I'll give the word to Ole on commodities.
Thank you very much, Peter. One thing that's not stabilizing right now is the precious metals and industrial metal space. We continue to see weakness there. Overnight, gold has broke below support at 1261, and we're seeing some additional selling coming in this morning. As we can see over here, we have broken the trend line from last December, and also at this stage we are trading below the 200-day moving average. The breakaway from the Bollinger Band may potentially hold or slow down the weakness, but the market is now focusing on 1250 as the next round number, but more from the retracement levels. 1240 is the big one. But we need to see how the market performs today, whether we can regain the 61 level or whether there's going to be an extension. At this stage, it's rate hike concerns ahead of next week's FOMC and the tax reform, which is continuing to reduce demand. Silver has been the leader in this sell-off. It's been the hardest hit. The ratio trading above 79. The gold-silver ratio has only traded above 80 3 times during the past 20 years. The last time was in February 2015, when it just briefly traded up to 83. So it could indicate that we are getting close to some relative value here in silver as we approach the 80 level. The copper bounce so far has been limited after the biggest one-day sell-off in more than 2 years yesterday. The stockpiles rise, winter industrial slowdown in demand, and worries about a general slowdown in Chinese demand is really the drivers behind this. Right now we are looking for a range in the 290 to 305 area. Oil did have a bit of an extension to the downside yesterday. The gasoline stocks, as you can see down here on the table, rose quite a bit more than expected. Even though we had a bigger than expected drop in crude oil stocks, the combined result of these numbers, also including the fact that we see continued rise in U.S. Production, was enough to send oil lower. It's also at the time of year where we have detected a bit of buying fatigue since last week's OPEC meeting. You can argue that may be valid, considering that we had the result of the OPEC meeting priced in ahead of the event. And also, we have this extended longs that has been mentioned on numerous occasions, which potentially needs to be reduced, especially this time of year where traders, to a certain extent, are more thinking about reducing risk than adding risk, and knowing where the risk is at the moment is most certainly been accumulated to the long side, so that's adding some potential pressure. But key levels to look out for on the downside: the big round numbers, 60 on Brent and 55 on WTI. That's it from me. Back to Yasser.
Thank you, Ole. Just to round up, ADP figures yesterday are giving momentum to the inflation trade. On equity side, the correction that we're seeing could be a buy on dip opportunity. Nothing in the macroeconomy has changed, so this could be a recurring theme that we've been seeing for the past months. Gold has broken the 1261 technical support level on the higher inflation expectations, and also on the tax reform passing the Senate. It opens up to the 1240, and the gold-silver ratio is approaching 80. It's only traded 83 times in the past 20 years. So this is something also to look at. And crude or oil is lower on jump in gasoline stocks, 60 on the Brent and 55 on the WTI, the main technical supports, as buying fatigue starts to emerge in crude. Have a nice trading day, and bye-bye.